Hi friends, and welcome to another portfolio update, this time for fall 2025, but here in front of you you can see how the situation in my portfolio looked back in beginning of July this year. So if you're more interested in this, freeze your video right here and take a closer look. But without further ado, we move to how things look today. And here you can see the situation today, how my portfolio looks. Without further ado, a few things to say. Upper left hand corner, these stocks as a percentage of my net wealth are 78%. So you do know I'm heavily invested personally in everything you see in front of you. About my cash situation for investing, I don't have any, I'm almost fully invested. And then let's see the right hand side next. Arctic Money performance since 2018, inception when I actually started my investing journey, plus 39%. This comes back annualized plus 4.5%. S&P 500 dividends reinvested, so the index itself plus 158%, 13.3% annualized. Everybody knows how hot stock market United States has been since when I started investing 2018, so absolutely amazing returns. But this returns would be for a person that invested all of his or her money back in January 2018 to S&P 500, not quite realistic for anyone, because to begin with, for example, I didn't have all my money that I have now in 2018 January. I've been earning monthly salary as all of we do, so comparing myself against the index is not really feasible here, but comparing myself against the index investor with monthly additions in S&P 500 with plus 56.4% and annualized gains of 6.1% during the same time I have been investing, that is the person who I want to beat, who I am comparing myself against. And obviously I am pissed off that I'm losing, but as I already said, the United States stock market has been the hottest in the world, probably still is, and so I'm comparing myself against the hardest index to beat. Well, if we exclude tech-heavy Nasdaq, which would be up much more, but I have chosen to compare myself against the S&P 500. I think it's the best benchmark to pick here, and the other one that I was thinking was some world index, but to be fair, the data is easiest to be found for S&P 500, and as I said, I like to compare myself against the toughest one, I would say. So this is the situation. I am not worried. I know the portfolio I have built myself. It requires for me to stay patient. There is no reason for me crying after the returns of S&P 500. I know things can revert really fast. In the past, when we go back to December 2024, I actually was beating the index investor already back in 9 months since. Things have changed. USA has gone, the US index S&P 500 has gone back up, and yeah, it has gone up. There is no big losses or anything in my portfolio, so this is the situation. I am patiently waiting for things to revert, because I think they will revert. And yeah, that's about it. The results, let's quickly see what has changed in my portfolio. First of all, biomedical laboratories from Japan I have sold completely out of. There are some new companies which you can see there: Green Landscaping, Auster, Greggs, who have entered my portfolio. And then one major thing to mention is that Origin Enterprises is only 9% now out of my portfolio. I recently sold 50% of the stocks I owned in Origin Enterprises. So my biggest position, I could say, actually is Yellowcake 9%, Sprott Physical Uranium Trust 8%, and Global X Uranium 8%. This comes back to 25% of my whole portfolio currently. I am heavily invested in uranium. That is my biggest bet still, and I really believe that the spot price of uranium needs to move up in the future, taking into account the broader supply and demand picture. I have good videos on uranium on my channel, so if you're interested more in the uranium investment case, check that out. Or check also out, actually, now that I want to do a little bit advertising too, I'm also active on X, the former Twitter, so if you want to check my profile out there, I write about these stocks and all things related investing and life overall. So if you're following this Arctic Money channel on YouTube, please do follow me also on X for more content. And that's about uranium. Still believing in it. Second biggest position, flow traders, 22%. That's hedge against volatility, liquidity provider that has existed for a long time in my portfolio and still does. If something really unexpected is to happen in the world and the markets would go in some sort of turmoil, this stock should do good at times like that. Then third biggest position, actually seeing a little bit stock price moving up, and that's why it has grown in my portfolio, Dr. Martens, the iconic boots from the UK. Then I have 12% in Kamux, the used car sales in main market Finland, but also in Germany and Sweden. Then we already discussed Yellowcake and uranium. Origin Enterprises, as said, still in my portfolio, but now I've sold 50% recently of my stocks there, so now a little bit smaller position. I took some profits there and a little bit made the position smaller to actually get some money to do some buys of completely new companies that we will see in a bit. So let's move on. Hims and Hers, 7%. They are personalizing healthcare in United States and globally. Very interesting company. Go definitely and just check yourselves out what the company does. But I know there are lots of things have happened with weight loss category of the company, which is an important category in terms of revenue and profits, and there is legal action and what else, everything happening there. But what I am really invested in myself is this kind of Amazon of healthcare business model they have already created, and I believe is the future. So that really is what I'm invested in. As with Hims, as with all the companies you see in my portfolio, I have videos of all of them on my YouTube channel, so if you're interested in any of them, go check that video out. But we move on now. A new entrant to my portfolio, Greggs, fast food chain from the UK, actually the biggest one in UK. Then we have Auster, also 4%, company providing LiDAR for robots, robotics, and drones and everything, real high tech. I actually just recently published a video on Auster, so go check that out. This is a risky play, obviously, when you go to investing in high-tech, smaller cap companies. Obviously, you carry lots of risk, but sometimes the risk can also come with huge possibilities to make huge gains. So, I have put 4% of my portfolio at this stage to Auster, and I think that's a good exposure to have. Not too small, not too big. Then we have Energy Services of America Corporation, ESOA, small position, 3%. And finally, I have just started a position in Green Landscaping AB, a Swedish landscaping firm in Northern Europe, operating mainly in Norway and Sweden. Just published a video on that, and I'm kind of still assessing the company, and I feel like this was a good time to open the position, and let's see if the stock price moves down. I can increase probably the position there. As with all of the companies here in my portfolio, I constantly keep on watching how their stock prices and fundamentals develop, as value investors do. But this is actually it. This is how my portfolio looks when we begin the closing stages of this year. Let's see how it turns out. Not much to update. Not much has happened since summer, to be honest. Overall, I think, as you probably have seen me and understand how I position myself, I believe S&P 500 and the markets in United States are overvalued. Sometimes I was thinking probably that they are grossly overvalued, but I wouldn't maybe go that far. It is true that it is heavy concentrated on the big names, Microsoft, Nvidia, Google, what do you have there? The market, the index concentrates heavy on those companies, but to be honest, they are not like crazy expensive. The companies over if you look at, obviously I haven't done valuations on all of them, but I have been reading about Mag 7, Magnificent 7, and what is the trendy name currently. Yeah, might be overvalued, but most likely not grossly overvalued. So this is my how I see things is that S&P 500 United States market is at the stage of overvaluation. I obviously feel my portfolio is undervalued, so I'm expecting things to revert in the future naturally. For me, I try to keep my portfolio real resistant. Whatever happens, I am prepared for it. If there is some broader market sell-off coming, I'm prepared for it. I think, for example, flow traders, as I told you, should do well in times of craziness. Also, I believe as a commodity, uranium is undervalued, and there is a too little supply coming to the market, and the demand is only increasing with all small and medium-sized reactors. Big companies in AI requiring lots of green energy, and the renaissance of nuclear energy in the world when a little bit more stupider people are also understanding that nuclear energy today is really safe, really green, really cheap, the best option we have in the world in terms of fighting global warming, for example, and also giving you that reliable baseload energy to your grids. But as said, go and watch my uranium videos. Follow me on X for more content. I'm active also there, and you can hear what I think of some stuff happening in the world as they happen. And this is my portfolio. I wish you all good luck in your investing, and let's see what the autumn brings for us before we end up to the winter, and that's the time when I will be making my next portfolio update some time looking at the end of the year. So you can expect a video like this then. Thank you for watching. See you in the next video. Bye bye.